Before we get into today's episode, it is almost the end of the year, it's almost tax season, and Nick and I are so excited to announce a new sponsor of the How to Film Weddings podcast.
That is Core Financial. John has used them for a couple years for doing his books and his taxes and his financial planning. I was talking to him about this time last year and he recommended Core to me, and I have been using them for all of 2019. Guys, girls, people listening, what is probably the most stressful thing that you have to deal with regularly in your business? I'm going to go ahead and say that it's books, taxes, and accounting, all of that. Would you agree, John?
100%. And having the team, Jeremy and the team over at Core, as basically another member of my team, an extension of my team, I've been able to focus on what really matters, and that's running my business and taking care of clients. So we are just so pumped to have an option for you out there. They're nationwide. And so if you're interested, definitely check them out. We're going to have episodes with them on soon, but we just wanted to jump on here before the episode to tell you how excited we are, and stay tuned for more from Core Financial.
And if you would like more information about Core and what they can do for you, head over to howtofilmweddings.com/core, and you can find out all of the information about them doing bookkeeping, about them doing your taxes, about them giving you a financial plan so that you should know if you should spend money in your business or not in the following months. It's a great investment. Yes, it costs some money, but it's going to save you so much money in the long run by hiring a company like this. We are so excited to have Core on board as one of our sponsors.
Your time is more important than working on financials most of the time. Shooting weddings is more important, making you way more money than worrying about your financials.
All right. Ready?
Yep.
Do you want me to start?
Sure.
Do you want me to get closer to my mic, or are you good?
I think it's fine.
Okay.
Before we jump into this week's episode of the How to Film Weddings podcast, I need to let you know that we had major technical difficulties with the audio. John and I don't sound really great, but that's okay. It's still quality content. It just doesn't sound as good as it could. So sorry about that, but I know you will enjoy.
Hello and welcome to the How to Film Weddings podcast. Today is a fun one. Nick was in Tulsa, so we thought we would do a podcast all in the same room. Nick, I think this is the first time we've done this.
Yeah, we've never done a
Here you are,
together.
Right there.
That was us really slapping hands.
Yeah.
Real.
So every time we do our podcast, we're in a Google Hangout. So I don't know how to do this with you. So this is weird. But we are here in Tulsa, and today's a big episode because one of our good friends who's been helping both of our businesses out, Jeremy Doorn from Core Financial Services, is here. He is our tax guy, our accountant.
It's true.
We both use him, and we're really excited because today we're really excited to use him because he has helped us so much with our business. So without further ado, Jeremy, say hello to the listeners. Introduce yourself. Who is Jeremy Doorn? Tell us what's up.
Well, thanks for having me, guys. Nice to see you both. I finally get to see both of you in the same place at one time. My name is Jeremy Doorn, as they said. I work for Core Business. We work with small businesses to help them tax plan, do some financial planning. We do payroll, taxes, and bookkeeping, but our main focus is doing tax planning so that small business owners like yourselves are not getting tax surprises, so that we're doing some tax planning and some different things before taxes come so that you know kind of what's coming down the road rather than just dropping stuff off at your tax guy and getting a tax bill. That's no fun for anybody.
Yeah, and if I must say, he is the coolest tax guy I've ever met. He's relatable. And so we thought it would be great, to kind of have our resident tax guy here. I will say this, he has saved me probably over $20,000 in taxes over the last couple of years. And so well worth his weight in gold when it comes to taxes and all that good stuff. So we wanted to just do an episode all about taxes, all about things, so that we actually just put in our Facebook group tax questions. I think that was the graphic that we put in there.
Mhm.
And we had so many of you
So
drop
many
questions.
So many
Yeah.
questions. And a lot of us, I think that when it comes to taxes and bookkeeping and all of that, that's usually the first thing when you're growing your business that you are outsourcing to someone else. I know that this was the first regular thing that I outsourced, was my bookkeeping and my taxes and all that kind of stuff. But it's definitely worth the money, because this is one of those business things that you don't think about when you start a business. Like all of us that are in the wedding video photo world, it's like, I just want to be creative and I just want to do this stuff. But the real stuff that can get you in trouble with the government and Uncle Sam and that kind of stuff, we'll figure that out later, right? So taxes and bookkeeping and all that, you definitely want to have someone that knows what they're doing, and hiring a company like Core, which we highly recommend, will save you thousands of dollars in your business potentially, just by having someone that knows what's going on when it comes to bookkeeping and taxes. So we're just going to jump into a few questions. We got several here. I'm scrolling on my computer a bunch. We got a
There's
bunch
at
of
least
questions.
2 or 3 really good ones. Yeah.
Oh, you want to start?
Sure.
Okay.
Yeah.
Okay.
I don't know how to pronounce. Is it Gil? Is that what we have here? Do we need to say the names?
Yeah, I mean,
We can't. And Gil had a lot of really good questions.
Yeah.
But the first question here, and again, these are kind of just in random order, just how to plan ahead for taxes. He said he saves 30% of his gross income. That's all he does. Maybe some tips for how we can plan ahead as wedding filmmakers. Should we be saving a certain amount back? What kinds of things should we be thinking about through the year?
Yeah, I think that if you're doing stuff on your own without a bookkeeper or a tax professional like me helping you do some of the tax planning, doing just a flat rate, you can do that sort of stuff. I don't typically recommend that because that's why it's kind of what we do, right? So we're helping you do your bookkeeping all year long, and then we're helping you in the third quarter, look at tax projections and look at what your actual tax is going to be, rather than guessing, because there's a lot of factors from one business to another. Like your business isn't the same as Nick's business, isn't the same as Gil's business. So everybody's tax rate is going to be based, typically with the small businesses, they're all flow-through entities. So the tax rate's going to be based on your own personal tax level. So working with somebody that knows your business, knows you, is going to be better than just guessing or having a flat rate. So it's hard to give someone just a flat rate to withhold or kind of hold back. And if 30% might be good for somebody, but maybe your tax rate's only 10%. So now you've stuck away way too much money or paid in too much money, and you don't want to get into that situation either. You'd much rather just pay what you should be paying rather than way overpay or way underpay. So that's kind of our whole deal is not making it such a guessing game, but making it more of what your actual tax rate would be.
Yeah, and before getting into the next question, I didn't say this before we got going, is the subject of taxes. It's very different in every state. It's very different in different countries. Be sure to consult with your tax person or even with someone like Jeremy before making big decisions. These are going to be general guidelines for certain things. But it's different. I live in Oklahoma, Nick lives in Kansas. There's different laws in just the different states. So when you're hiring somebody in your area or somebody that knows your area, they're going to give you a much more specific answer. So a lot of these questions will be general answers.
Well, and they have to be general. There's so many things. The tax law is so complex. There's so many things that go into a tax return that everybody's state situation, everybody's individual situation, even John and somebody else in Oklahoma, they're going to be completely different. I mean, there's just so many factors that go into a tax return that it's hard to just give a blanket answer and that be correct. So this is, like you said, just generalities mostly.
Good info there. Good info there.
Making taxes cool since 2020. It's not, whatever.
Okay, Hector Almazan.
Also known as Hector.
Hector. I'll just say Hector. Okay. He asked this kind of specific question, but I'll make it a little bit broader. He says, can we deduct outsourcing edit jobs overseas? Oh, interesting. Overseas stuff. But then we did get a lot of questions in here about tax deductions and what kind of stuff, fall under deductions and that kind of thing. So the overseas one, that's an interesting question.
Yeah.
Yeah, I'm not much of an overseas
Okay.
international tax law kind of person. But if you were outsourcing something and it was a business expense, of course it's deductible. And going back to the deductions, a deduction according to the IRS is anything that's ordinary and necessary in business. So it's anything that would be ordinary and necessary in the course of your business. And capturing those deductions is the most important part. So you go back to the bookkeeping, right? The monthly bookkeeping. If you're not reconciling your bank account, you don't know that everything's been accounted for. So with us, you get the monthly bookkeeping. That means that all of the expenses have been accounted for. And then there's other things like mileage that might not be captured in those bank statements that if you're working with a tax professional, they should be asking questions about mileage, maybe cell phone reimbursements, different things like that people might not think about.
Before asking the next question, I think it would be cool if you've been doing our taxes, our bookkeeping for 2 years, I think now is what it's been.
Yeah.
What are the things that, like the services that you're providing for me? Because as a business owner, and I'm like the business guy, I love the business stuff. The taxes are so confusing. And like, I'm always, bugging you. It's like, well, what should I do here? How can I? So, Jeremy does a really good job of like keeping me up to date throughout the year of saying, hey, this is where you're at on your tax projections. Can I call you? Can we talk through these things? These are some things you need to be thinking about. But, if somebody was out there and saying, hey, like I want to actually hire who John uses, who Nick uses, what are the services that you're providing for me right now?
Well, like I said, we do monthly bookkeeping. So that means we go through, we reconcile your bank account, make sure that everything's being accounted for. We go through and we post monthly financials, the balance sheet, the income statement, to a certain portal, to a secure portal, not certain portal. And then we also do payroll. So some people have employees. So like you have employees. So we end up we do full service payroll. We do taxes, of course, at the end of the year. And then throughout the remainder of the year, we do tax planning, we do tax projections, we do break-even analysis. We do anything that is as meaningful as it can be for you. Mm-hmm. And then there's also unlimited phone calls and consultation. So you have a tax question, you have any sort of question you want to meet about selling your business or selling a part of your business or partnering with someone and starting a new business. Mm-hmm. Any of that kind of stuff is all included. It's a monthly flat fee. And that's kind of...
Yeah, I think my favorite part about all of it is, like, before this, I think so many people posted that they're just kind of guessing what's going on. Mm-hmm. And there's a freedom to knowing that somebody that is a professional in that realm is looking at your books, looking at things, and making sure that you're not doing anything stupid. Because if you're not looking at your taxes until March or April, the year before you is already gone. You can't make changes. You can't do things. And so when I first hired you, I was in the middle of working with somebody else. It was confusing. All the books were kind of just all over the place. And, you were like, why are they doing it this way? Why is it? And I was like, I have no idea. I'm not a tax person, And so having you guys go through and you have access to my, my bank statements and what's going on. And so you every month are filing and keeping that in order for me. By the time that November or December gets here, we met a month or two ago and you're like, this is for the rest of the year. You're looking good here. This is good. You might want to hold off if you can not pay yourself as much in this month, but maybe at the beginning of the year. And so you're looking specifically at my situation saying, oh, this tax credit applies to you here because of this, or, oh, hey, you should file separately because of this, and just having it all in one spot where I know that that's just taken care of, and I'm not doing anything illegal on accident. Everything's good, and it's like, yeah, you're going to owe this much. You need to be saving back this percentage, and it's like, oh, that gives me, the right frame of mind to be able to know that that's good over there. If I have any questions, I can do it. But like everything involved in my taxes is being run through you all. So you guys just hand me the sheet and say, yeah, this is good, this is not, or whatever.
Yeah, and I think a point that you made too was come March or April, you take your stuff to your tax guy, you give him the numbers, and he goes, well, you owe this much. Well, you can't go back and get a piece of equipment from the prior year and get a deduction for it, right? You can't go back and set up a 401k plan for the prior year. You can't go back and make an S corp election. You can't go back and do all this stuff. If we're looking at this stuff in August or September, we're looking at it throughout the year, we're giving ourselves time to actually do something about lowering the taxes legally, but giving ourselves a chance to do something before the end of the year rather than giving ourselves no chance and just saying, well, you owe this much. So
Yeah, that's really good. I like to and legally do this. That's another thing. That we kind of talked about at the beginning of this. But when we posted a question, there are people who are not tax professionals. We're just doling out all sorts of tax information. And is some of it right? Maybe. I'm not going to necessarily trust them, but a lot of it is. I heard from my guy this. But I don't know the laws. I don't know all this stuff, And here's a situation in my business that I'm really glad whenever I hired you guys is, so in the state of Kansas, I don't have to pay sales tax if my stuff is digital. That's a Kansas thing, not necessarily the state that you're living in, okay? I don't have to pay sales tax if there isn't anything physical delivered. And so in my mind, I was just like, oh, I don't have to report sales tax because I don't have to pay sales tax. And anyway, then I'm getting phone calls, from the Kansas IRS, you're owing us $7,000 and all this money. And I'm like, why? I don't, and so anyway, that was something that I was able to turn over to you guys and get that all squared away. So, that's just another thing that they are taking care of that I don't have to worry about so that I can focus on the stuff that can help me grow my business. So,
well, and it helps, I think, of having timely financial information, the monthly financials, the tax projections, knowing what you're going to owe next year also helps you make better business decisions. If you don't know where you're at, how are you going to make a big decision on whether to buy a piece of equipment or do this or do that or whatever? You're not going to know.
Yeah, I think a lot of us too, you hear things from certain people and it's like, oh, you should go buy a truck. That'll be a huge write-off or whatever. And that is not the right answer for most people. And there's so many things that go into that, but there's just so much hearsay.
Yeah, well, and I think it's people taking tax advice from people that don't know anything about taxes. Yeah. Just have heard if I buy a big truck, I get a big write-off. That is true, but what's the ramifications of that? Now you don't have a deduction next year. Now you don't have the cash flow. Now your money's gone. Now you have something. You've bought a truck that's not actually creating you money, so you just bought something to skirt taxes for the 1 year. So there's a lot of planning that goes into that. So it's not always the best option. Just go buy a truck, because then what are you going to do next year? Go buy another truck?
Right.
Okay.
That's what you as a listener, you would never take wedding videography or wedding photo business from the person that works at Starbucks, or they wouldn't say person that works at Starbucks isn't going to tell you how to run your camera, run your business. But whenever I tell John how him to do his taxes, that's kind of the same thing. We really have no clue what is going into this. So let's keep going. Gil asked another question, and I've heard a lot of misinformation about this, or a lot of opinions and stuff, and so we'll just let you kind of give your expertise here. When is a good move to change to an S corp status? And what are the advantages? You're doing a deal.
No.
I'm sure.
I love this question.
And I know with the new Trump, tax laws and everything.
You can't say Trump on our podcast.
Oh, I'm sorry. I'm
just kidding.
Wait. This is about Trump?
No.
Now I'm confused. Okay.
No, I know whenever he took office, he changed a lot of the tax stuff. And so, maybe before you were they were pushing LLCs and now they're pushing S corps and all that. So why don't you just kind of clear up your thoughts on that?
Yeah. So.
And who did you vote for?
Yeah. No, we're not going to go over that right now. This might be the wrong place for that. So when it comes to an S corp, a lot of times people just think, oh, I just need to go make an S corp election. Well, you've got to really break it down on what the S corp is actually saving you. And so what an S corp does is it basically pushes off when you're just a sole proprietor, like many small businesses start out. You start out on Schedule C on your personal return. All of that money is subject to self-employment tax. Self-employment tax equals Social Security and Medicare, which we all pay if we're employees, right? If we get a W-2 check, we pay half of it. So Social Security or self-employment tax, when you're an employee, is just you pay half of it in your check, your employer pays half of it. But when you self-employ yourself, you get to pay both sides. Yay, self-employed. So when you're on Schedule C, all of your income is subject to self-employment tax, which is 15.3%, not important. But an S corp is a flow-through entity. So there's a separate tax return. It would have its own corporate tax return. And all of that income, when it flows through to you and gets taxed to you at the personal level, all that income is not subject to self-employment tax. So when you make the S corp election, there's a couple of rules that you have to follow. There has to be under 100 shareholders. There can't be different classes of stock, different things. But the most important one is that you have to have, if you're an officer of the company, you have to pay yourself a salary. So in essence, if you're paying yourself a salary, you're still paying self-employment tax, right? So you have to pay yourself a reasonable wage, which the IRS doesn't clearly define, but you have to pay yourself a reasonable salary. So really the only thing you're saving by going from a Schedule C to an S corp is self-employment tax. So typically, not every situation is different, but I like to use the $50,000 net income number. If you've got $50,000 in net income after revenue and expenses, that's probably a good time to start looking at making an S corp election, because with an S corp election, you've got to bring on payroll because you're going to pay yourself. And if you think you're going to do payroll yourself,
Don't do that.
terrible
I tried to do
idea.
that, yeah.
Don't do it. It's a terrible, even if it's just you, it's a terrible idea. I'm telling you.
It's real bad.
Let somebody do it. Let me do it. Let somebody do it. It's $100 a month max. Just go spend the $100 a month. So that's $1,200 that you're going to have to pay. You're going to have another corporate tax return or another tax return, which would be the S corp tax return. That's going to cost you an easy $1,000, $1,200 extra dollars. So that's $2,400 in self-employment tax that you've got to overcome. So if you're making $30,000 net income and you've got to pay yourself a $30,000 salary to go to an S corp, or say you're going to pay yourself $20,000 salary as an S corp, that $10,000 gap, that's only a $1,500 save, but you're going to have to shell out $2,400 in expenses. That probably wouldn't make very good sense.
And I personally run an S corp. We have a larger net income than that, and we have employees and things like that. But like whenever I first got going with employees, 2012 was kind of the first. I had my brother who has an MBA help me, who works
He
with
must
me.
know taxes if
Yeah,
you're an
and he helped go through online. I paid him to help us file for employees and my salary, even like you said, with just one person. And he filed them, but he did it wrong. I can't believe that.
Because he wasn't a professional.
Right, exactly.
Yeah.
He did it wrong. He missed something, and the government didn't see that for like 2 years or
The
something.
government works fairly slow.
Yeah, they're a little slower.
Yeah.
Uncle Sam, if you're listening, I'm sorry, but
Is it bad?
so I get a letter in the mail from the IRS like 2.5 years later that says this quarter 2 of year 2012, you filed in like incorrectly. It was a $3,700 mistake plus fees and penalties.
Oh, penalties and interest.
That's it. Penalties and interest for like 4 years or something, and it was like now the bill's $7,800,
Mhm.
and so it's like, what do I do? You pay that because you. Guess what? That was a $4,000 mistake, which would have been worth years of hiring this guy.
Totally
And then
worth the payroll.
Another quarter happened like 2 years later from like a year. Anyway, it ended up being like $15,000 mistake that would have been avoided if I would have just brought on a professional. And I have that scar on my back if you want to see it, and I don't make that mistake anymore. It's back there. So it's so worth it. You don't want to mess around when it comes to your taxes. You don't, especially in small business. It's so much different. There's so many different rules, so many different things. Like it's not worth it.
Well, and especially when people are new to small business or their business is growing, that's when the planning and everything else, let somebody do it for you, because these numbers become very large. The IRS is a terrible creditor to be in credit, or have penalties and interest be growing on. They're very expensive.
Do you remember that wedding from a month ago? Yeah, like that one that you needed to start editing yesterday? But you also need to prep today for your wedding tomorrow, and you're leaving for your first vacation in forever on Monday. So what do? It seems that the only creative part of your edits are the excuses you're going to have to give your clients. We have the solution, Wedditor. Wedditor is a team of top wedding editors, project managers, and account coordinators that help us wedding filmmakers edit. They match the right editors with your style so you can spend your time where it matters most, on your business. Nick and I both use Wedditor, and we don't know how we would run our companies without them. It takes a team to build an amazing business, and you shouldn't try to do it all on your own. Head over to howtofilmweddings.com/wedditor to help you free up your time so that you can focus on growing your brand. Be sure to use promo code HTFW for $50 off your first project. Wedditor, more than freelance, more than outsourcing.
How do you deliver your wedding films? Dropbox? Disk? A subscription service that is way too expensive? We have the answer for you. Wedflow. Wedflow is a cloud-based digital delivery system that we love. I personally have been using Wedflow for months, and I can't get over how great of a service it is. First off, Wedflow is pay per project. That's right, you only pay for the data that you need. Wedflow uses a premium viewing experience accessible on all modern devices and playback up to 4K. With custom branding and theming, wedding filmmakers can deliver an experience that's truly on brand from start to finish. Head to howtofilmweddings.com/wedflow and upload your first project for as little as $1 per gigabyte. Wedflow, a whole new take on wedding film delivery.
I've owed a lot in the past because of stupid crap like that, and it's like it strikes a nerve with me where it's like if one person out there listening takes our advice and hires someone locally, hires Jeremy, you're going to have a peace of mind, and B, you're going to potentially save thousands, if not tens of thousands of dollars over time. I mean, that's why I was saying he's worth his weight in gold, is because yes, it is a premium charge to have somebody do this for you, but the amount that you can save, just this last year, he was like, oh, if you file this way, it'll save you $7,000. And I'm like, oh, you just paid for yourself plus gave me thousands of dollars. I appreciate that. I'm going to go ahead and put you on my Christmas card list, you know? So,
And your time is more important than working on financials most of the time. Shooting weddings is more important, making you way more money than worrying about your financials most of the time.
Okay. Josh asked this question. I think it's a really good one. He's just finishing his first year in business, but he's not an official LLC. He's just been using a website like Credit Karma to file his personal taxes and that kind of stuff, and he doesn't know where to begin. So someone that may be in that position, that they're just kind of running their business as a sole proprietor, just all of your money in one spot and that kind of thing, and not an LLC, what recommendations would you have for them moving forward, and what to do?
It just really depends if they're really trying to grow that business into something that's going to be their full-time gig or something a lot bigger than they're going for. Getting the LLC, as far as tax purposes, doesn't really matter. It's more of a legal thing. It's limited liability. So I'm not a lawyer, so I'm not here to give you legal advice. But getting that LLC can kind of, and then separating that out from your personal bank account and just having that run as that separate business can be pretty important. And then, and then just creating some sort of financial process to reconcile that bank account so that, if it's not big enough to maybe do the monthly financials, something using QBO, QuickBooks Online, to reconcile that stuff. I think the reconciling is the most important part, so that you are capturing all of the expenses.
Can I just ask will you explain what reconciling your account means so the people out there know? I know what it means, but just
yes.
In layman's terms.
So reconciling a bank account. So every month, your bank account, you have a bank statement with an ending balance on it, and going through and reconciling to that balance in the bank account, so that all the deposits, all the debits and stuff have come out of the account are all accounted for.
Like you've put them into the right categories.
They don't necessarily need to be in the right categories. They might, but they've all been accounted for. So if there's
for people that are over 40, balancing your checkbook, I mean, kind of basically the same thing.
Yes, basically the same thing, but making sure that everything is accounted for. So, because if there might be little things that you miss here and there, and then really in that case is getting with somebody that they can trust to ask them questions at the end of the year, so they are getting all of their deductions as far as cell phones, mileage, different things like that. Yeah, for sure.
I mean, you can bring somebody on, like, in February, March, you bring all of your info to them, and they can tell you and make sure it's organized correctly. The thing you miss out on that is you can't fix anything once it's done. Once the year hits January 1, you can't really do too much for the previous year.
Yeah, there's not a whole lot of planning that you can do after the year's done.
You're just kind of stuck with what you have, and you're already into the next year. And so like even coming and meeting with somebody in the middle of the year before, and saying, here's all my stuff. You know, if I'm a small company, $50,000 or less coming in, it's like meeting with someone like Jeremy, paying them, hey, here's all my 6 bank statements so far this month. This is what I'm doing. Am I an idiot? Am I smart? What am I doing? Because it's obviously the tax code is thousands of pages, and it's like nobody really understands all of it, and it's confusing. And so like that's kind of an in between, like going somewhere before the year is up to say, hey, I'm 6 months in. What should I be doing? You know, that kind of thing. So that's another option. Sure.
Oh, absolutely.
For someone smaller. I'll move on to the next question here. Where are we at?
We just asked this one from Josh.
Okay, I'm going to do this one right here from Thomas. So Thomas says, I was told you can have your home under your LLC. True? If so, is this a good idea? Or ...
That's a loaded question. Did you say it was Thomas?
Thomas. Yeah. Thomas.
He
was in Arkansas. I think this guy.
He's
at my workshop.
Yeah. So if your home is your personal residence, I would say it's not business. So, you know, there is the home office deduction that you can take for having a home office. There's a couple of different ways of figuring that. But yeah, having your personal home that you sleep in and bathe in, and I don't know that that's going to pass the smell test if you were going to get audited and you somehow, you know, started depreciating the full value of your home through the business, because it's not a business asset.
Yeah.
So
it's really not being. There's a room in your house maybe being used for a business, but like that gets into the potentially shady sniff test, like you're saying, the government, when it's like, oh, they're writing off, that like puts up a red flag for them to be like, we might need to audit.
Well, yeah, and there's the home office deduction. So if you're trying to deduct the portion of your house used for your office, there's the home office deduction.
Which is what I do.
Which is what he does. And then also when you put it in a business like this, when you go and sell your personal residence, whatever gain you make on that house now becomes income to you. Mm-hmm. So, but if you had a personal residence and you went and sold it, as long as the gain wasn't $250,000 for single or $500,000 for a married filing joint return, if the gain on the house wasn't more than that, it's an excluded gain. So you don't actually have to report the gain. So you're actually just creating income for yourself when you actually sell that house.
That's good.
And so it's more, beside it being like shady legal.
Besides the fact that it's not a business asset, it's not ordinary and necessary to own a personal residence
so many
in a
people,
business.
Seems like they're trying to write something off just because they're trying to write something off instead of they use it for their actual business.
And do you run into this a lot where people talking about write-offs and like that kind of stuff? Is there maybe a misconception about what a write-off is? And I don't mean like, oh, you can just write that off, but it's almost like people think that it's kind of bonus income or something, but it's really not, because it's all the same money. It's just whether or not you're taxed on it. Like, is this question making sense to you? Like, maybe not.
I don't know what you're asking.
Well, you hear just write it off, or buy this and write it off. But you're like, you're not getting. You still have the same amount of money, and it's do you need? I don't know what I'm asking.
Well, and I think it kind of goes back to like the truck thing. Like if you're just buying stuff just to buy stuff to get the tax write-off, is that the best use of your cash? Yeah. You could pay the 20% in tax, and at least you'd still have 80% of that money still left. If you go spend it just to wipe out the tax, and you're buying assets, it's different in the wedding industry. You guys have some equipment and stuff, but like in like a manufacturing, if you go buy a piece of equipment that you're not going to run any widgets through, but you just go buy it just to write it off in that current year, that's a terrible idea.
Yeah, because you're taking, like, if it was a $1,000 investment, you could write that off, which would save you, if you're in a 20% tax bracket, it'd save you $200 if you spent $1,000. So yeah, you saved $200 on your taxes, but you paid $1,000 for something you didn't need.
The money's gone
to save that. And so if it is something you're going to use.
Yeah,
heck yeah.
So that's where the tax planning comes in. Like if in January you think you're going to need a new computer or some new equipment, and you could really use we do a tax projection for you, and it's like, man, how else can I lower my taxes? Well, if there's some equipment that you might need, well, in January, we'll push it back to December. If you can get it in December, then we can end up writing it off in December. And I think another misconception is I've had several calls or people ask me this, that if they set up an LLC and get an LLC bank account, that automatically everything that you run through an LLC bank account is a business expense because it went through an LLC bank account. Not true.
Yeah.
It's got to be ordinary and necessary. It's got to be a business expense.
Right. Yeah, I mean, when you're looking at your taxes and what you're spending on your business to make money, that's pretty much in the parentheses of something you can write off. Is this something, like, yeah, you need shoes, but, like, you can't just go buy Air Jordans and be like, yeah, I need that for wedding filmmaking.
That was the thing. Whenever, the guy that initially did my taxes, he went to church with me. He wasn't a CPA, but he was an accountant, so he knew this stuff. And whenever he was going through my books, he was like, there's this $350 expense from JCPenney. And he was just asking me about it. And I was like, well, my wife, we needed some clothes for our weddings. And he goes, okay, are you wearing that exclusively at your wedding? Like, you're not wearing it anywhere else? And I was like, I mean, my shoes are on right now. He goes, technically, that's not a business expense because you're not using it solely for business stuff. So, I mean, again, there might be some stuff where if you were audited, you could talk to them and they might, okay, that's fine. But like, that's the kind of thing that we think of if, I can buy whatever. And if you're using it more than 50% outside of your business, then it's technically not a business expense. Is that?
Yeah, there's usually, I mean, some of the stuff, if you've got cell phones, there's de minimis rules. So if you're using it more than 50%, you can just basically write off 100% of it. You don't have to separate out the business use. But yeah, if it's under 50%, you'd have to separate out the business use of it and do a percentage of it. And it just gets really, really, complicated.
We know the time suck that is searching for the perfect song for your wedding film. MusicBed has spent years collaborating with artists, bands, and composers to make it easier than ever for anyone to find the right song for their video.
With amazing artists like Chapters, Tony Anderson, and The Light, The Heat, MusicBed is the best place for wedding videographers to get licensed music.
Their subscription service was a life changer for me, especially since all of their subscription music is pre-cleared for every social media platform: Facebook, Instagram, Love Stories TV, and my personal favorite, YouTube, all pre-cleared.
And if you are interested in a free month of a MusicBed wedding subscription, head over to howtofilmweddings.com/musicbed. When you sign up, use the promo code HTFW and you will get your first month for free.
And when it comes down to it, you really don't want to mess with trying to work the system. I mean, someone like Jeremy can show you things that are legal and legit.
Yeah.
It's like, yes, of course you need to be writing that off. We don't want to just give more of our money to the government. Like, I mean, that's not something I want personally. It's like, how can I get more taxes?
I want you to pay the least amount in taxes, but I do want you to pay whatever is legally binding on you.
I think something that's really interesting, and I think I saw this comment from someone, it wasn't a question, it was just a comment, was, whenever you work, you're working for someone, you almost look forward to your tax return because you're getting money back. You're almost like, oh, this is bonus money.
Yes.
Actually, that's not true. If you get a $5,000 tax refund, you paid the government $5,000 too much and you are getting it back. It would be much better for you to actually figure out so that, you want your tax return to be zero. I mean, theoretically.
In a perfect world, I wish I could.
Yeah.
In our world, we like to get it close. So we don't want to get way overpaid like that because being overpaid, you're just giving them an interest-free loan. They're not going to pay you interest on that, right?
That was the point. I think it was when I went through Dave Ramsey, that was kind of the thing that he said. He's like, you want it to be zero because let's say it's $5,000. Wouldn't that year of $5,000 in in some savings account where you got some interest back, that's going to be much better for you than just getting $5,000 in one lump sum. So,
and that's your money.
Right.
That was your money. You could have spent it last year.
And I think that's
remember when you wanted to buy that really cool thing and you couldn't because you didn't have the money? The government had it.
Right. And I think that's something that maybe a lot of people don't understand until they're self-employed, is that money isn't, it's just because they never see it, right? Because it gets pulled right out of their checking account. But that money is your money. That's why you're getting it back, because you gave them too much.
Mm-hmm.
Yeah. Kyle asked this question. He's like, I don't even know where to ask here. I found myself not knowing what my tax bill will look like, which means I haven't paid myself in months because I want to keep as much possible in his account. Okay, not knowing your numbers, not having someone, so you just have a bunch of money in there to pay it. When it comes. When someone pays to you, do you immediately put a percentage into another account that just sits there for taxes, and that way the rest of your expenses, savings, withdrawals, that kind of stuff?
Yeah, I mean, there are clients that do, and you certainly can if that's your system for saving. But then knowing what you should be saving is probably the more important number than just shoving a bunch of money into a savings account, because if he hasn't paid himself, which means there's probably stuff that he would like to go get, but he's scared that he's going to owe a whole bunch in tax, which he might. I don't know his personal tax situation, but if he ends up not owing a whole bunch next year, what could he have done with that money in his business, in his personal life this year that would have been awesome or cool? Or, that's hindering a lot of business decisions. Like, should I go buy that new thing? No, I can't go buy that new thing that's going to make me super efficient. I can't go buy that because I've got to leave that money in there for taxes. Well, if you had us working for you, or you were working with somebody to do some sort of tax planning, you would kind of know about how much tax you were expecting to owe, and then you would have a better idea. Like, I just had a client that I went and did a tax projection with, and it turns out that he had just come on last year, but he had paid in, we made an S-Corp election like we just talked about, and it ended up saving him way more money than he had expected. So when we did the tax projection, he was expecting me to tell him that he owed like $20,000. So he had all this money stashed away, just like John, I think you said it was? Kyle. Whatever. John now. So he had all this money sitting there. Well, he was in a growth phase of his business, and they were looking to spend more on marketing, but he wasn't willing to spend that because he was waiting to spend this on taxes. Well, we came in September, did a tax projection, said, no, you know what? You're looking like you don't even need another $20,000. You're probably paid up. Like, you should be good in April unless things drastically change. And he was like, that's the best news, because now I can go spend this $20,000 on all this marketing that I wanted to do, and that helps his business grow. Right?
So many of us, the word that I was feeling from what Kyle was saying was more fear. It's like, I'm afraid that I'm going to owe a big amount, so the only thing I know to do is just sock it away over here. And one of the things that I love the most about working with you is I operate now in a place of confidence as opposed to a place of fear.
Yeah.
And so, like, I do personally pull back a certain amount. I'm an S Corp, so I pay myself a salary and a wage, and I have a separate savings account that every time I pay myself, a percentage just goes into this account, and I forget about it, and it's there. And Jeremy's like, you don't need that much. And I'm like, yeah, I know, but I just want a little bit more just in case, because I would rather have a buffer. I don't have a crazy, I don't have $20,000 extra dollars sitting over there. But, I have a few thousand extra dollars sitting in that account in case it's above or below. And then that gives me the freedom to say, I know that this money is my money. And now I can make these decisions that help my business. And, doing marketing for us in November, December, January is one of the biggest times because people are getting engaged. And so if you're sitting here waiting until March or April to file your taxes, and then you're like, oh man, I wish I would have known that I could have spent that money in December and written off those marketing dollars. And if I would have, and now your business is suffering. And so fear versus, confidence is something that you get whenever you have somebody around that's telling you, nope, you're good. Yeah. This is what your state law is. This is what your federal law is. This is what your country, whatever it is. It's like, makes it so much better for you to actually run your business, and it makes your business fun to run at that point. And so you're not just like, taxes.
Yeah, like, it doesn't have to be that, it's tax time again, I gotta go see my accountant. Like, nobody likes a relationship like that. Like, I don't like relationships like that. It's not fun. No business owner wants to run their business like that. That's crazy.
Yeah. And especially whenever you're not, there's some people that are just, good with numbers and spreadsheets and keeping track of that stuff. And then there's some people like me that were, like, I remember for my books for a few years, I did it like twice a year, You almost spit out your water when I said that.
No, because I had a client that, so long story short, this service package that we used to have, it was basically tax planning and then a tax return. So we would do the tax projections kind of like we do for you guys, but we weren't doing monthly books. They would kind of do their own monthly. They would keep their own monthly books. We no longer have this service, but this is just for the story. The guy was getting me his books. It literally took him 2 months for him to come up with numbers for me to do a tax projection. And then I turned around and got him a tax projection in like 2 hours. And he was like, seriously? It took me 2 months to get you those numbers, and it took you 2 hours to get me a tax projection. And I was like, yeah, but this is what I do. I said, if you would let me do your monthly books for you, you wouldn't have to worry about this. And all these 2 months that you just spent trying to get all these financial numbers together that we don't even know are absolutely correct because you're not reconciling to anything. You're just giving me a spreadsheet of just some numbers. Mm-hmm. And he was like, I said, all you got to do is pay me like $250 extra a month. And he was like, yeah, let's start that January 1. So he's coming on monthly now too, because he doesn't, there's, you guys can be doing better things. You have weddings to shoot.
Yeah, and it's like, it is a few $1,000s, a year to do something like this, but like, if you're able to get one more wedding out and somebody wants to book you because you did that wedding, and then just overall, I mean, we've been talking about this a lot on the podcast, but just like overall happiness and fulfillment and enjoyment. It's like, I enjoy what I do more now because there's not like a ringing in the back of my head, like, oh no, it's coming. I know that I'm going to owe a big amount. This fear, you know what I mean?
I remember last year, about December time, I was like, okay, I have like 6 edits in my backlog, and we were trying to, be 6 weeks or so turnaround time. And it was like, I was pushing up that, and I was like, oh, I need to do this editing, but I haven't done my book since July, and it's December. And do I need to like, do I have enough money to make any expenses so they come on this year? So, like that kind of stuff. And so I had to spend like a whole day, figuring out this tax stuff because I was the one that was doing the books, which I knew how to do, but I didn't enjoy doing. And I think that that's an indicator in your business. If there's some part of it that you don't enjoy doing, then find someone else to do it outsource it as soon as you can.
Because there's somebody that loves it.
There's somebody that loves it, or someone that gets paid to do it. So they're like, yeah, okay, I will do this. But, if you're listening here and you like doing the books, and that's something that you look forward to, like, go for it. And then you can get a tax guy to like, kind of look at your numbers and projections and like that kind of stuff. But it really took away from the editing side, the creative side for me, because this was a thing that I had to get done. It was annoying. Yeah, it was really annoying. Well, Jeremy, thank you so much for joining us. I know our listeners really, really have learned a lot for having you on today. We want you to check out howtofilmweddings.com. There, you can buy our consultation guideline. Can really help you whenever you're talking to clients and trying to upsell them and serve them very, very well. We have some great information in that consultation guideline. If you're watching on YouTube, subscribe to our channel. If you're listening to this on your favorite podcatcher, leave us a review. Share this with someone that might like it. And until next time, we will see ya.
See ya.